Millennials and Gen Z individuals are driving the gambling craze. As younger age groups make up more of the population, expect these gambling stocks to surge. DraftKings. More and more Americans are betting online, especially when it comes to sports. MGM Resorts International. The gambling capitals of the world are making a comeback, and this business has a solid footing in those places. Penn Entertainment. Once recession fears start diminishing, Penn Entertainment will likely outperform the market. Let's dive in. Here are the 3 gambling stocks to play the sports betting craze. Welcome to Timely Investment Research. As more states legalizing sports betting and revenge travel heats up, the tourism scene in various gambling locales should improve. From Sin City to online gambling stocks, there are plenty of options for growth investors looking to get in on the action by betting on the house. One of the most prominent trends underpinning the recent gambling boom is the surge in sports betting mania. As of March 2023, 33 states have legalized sports betting. Additionally, around 68 million Americans, or 20% of the U.S. population, said they would wager on March Madness. That's up from 50 million in February for the Super Bowl. The online gambling industry alone is expected to grow at a 12% compounded annual growth rate through 2030. I believe even higher growth is possible, considering the number of millennials and Gen Z individuals feeding this gambling trend. With that in mind, these 3 gambling stocks are well positioned to make the most out of these strong secular tailwinds. Number 1. DraftKings. DraftKings stock has been hot this year, delivering nearly 70% growth year to date, as sports betting trends accelerate. Despite these tailwinds and the stock's recent surge, DraftKings stock still changes hands 74% below its peak. DraftKings trades for around $18 per share right now. That said, I think with significant upside potential remains with this name. That's because the company has been expanding its offerings beyond sports betting to include online casino games and other forms of online gambling. This diversification could help DraftKings capture more significant market share in the online gambling space. According to Yahoo Finance, analysts are bullish on DraftKings stock with an average rating of buy and a 12-month stock price forecast of $24.14. This implies upside potential of roughly 35% from current levels. The company's financials also appear to be strong, with revenue growing 80% year over year to $2.2 billion in 2022. DraftKings is not yet profitable, but its net losses have narrowed quarter over quarter. These numbers should continue to improve in the fourth quarter of this year. Accordingly, the company's strong growth profile is what I think deserves more attention, making DraftKings an unprofitable gambling stock worth buying now. Number 2. MGM Resorts International. MGM Resorts International is another top gambling stock which has been propelled by the impressive gambling craze in this post-COVID world. With key operations in both Las Vegas and China, MGM is known for its luxury resorts and casino operations in the world's biggest gambling centers. Macau and Las Vegas are 2 of the world's top gambling capitals, both of which were hit hard by pandemic-related closures. However, MGM will be a standout winner among gambling stocks as both cities roar back. MGM stock has gained 31.5% year-to-date, with quickly improving financials. Its fourth quarter earnings beat analyst expectations with revenue of $3.59 billion, representing year-over-year growth of 17.4%. Additionally, the company's income came in at $284 million, meaning MGM stock trades at a bargain price earnings ratio of only 12.9 times. Of course, more factors determine the stock's valuation. MGM has substantial debt and is expected to see reduced profits in the coming quarters. However, all things considered, the stock still deserves a much higher valuation. Analysts have an average price target of $55.07 for the stock, implying 27.3% upside. Number 3. Penn Entertainment. Penn Entertainment is an outlier in this list of top gambling stocks to buy. This year, PNN stock has been trading sideways, down 1% on a year-to-date basis. That's much worse than the broader market. However, I believe there's nothing wrong about the company or its fundamentals, or at least not enough to cause it to trade at these levels. Instead, the risk of a recession drives investors away from the company. Of course, the risk of a recession is much lower than a few months before. As markets remain robust and the Federal Reserve is set to pause its incredibly fast rate hiking program, companies like PNN Entertainment should benefit. Other factors, such as a robust labor market, also point to the idea that the U.S. economy is more resilient than ever. Thus, as more investors buy into the growthier areas of the market, PNN stock could be poised to deliver much improved results in the quarters ahead. PNN stock's average analyst price target is $41.02, implying 42.1% upside. A number of analysts believe the stock could go as high as $55 over the next 12 months. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.